Sources of finance. Finance means fund collection, its management and distribution. In this chapter, we will learn about the concept of sources of finance for doing the fund collection activity efficiently. Different sources of finance have different features. For these different features, fund should be collected from different sources suitable for different situations of the business. For example, to purchase a fixed asset, that asset fund should be collected through share selling. Again, to meet the daily needs such as raw materials purchase, credit purchasing can be used, or short-term bank loan can be utilized. After reading this chapter, we shall be able to identify the sources of finance, analyze the classification of sources of finance, describe the advantages and disadvantages of different terms finances, identify the source of short-term finance, identify the sources of mid-term finance, identify the sources of long-term finance. Introduction. Selecting the sources of the fund which is required to start any business organization or to conduct the daily activities of business is an important decision of finance management, because different sources have different costs of capital and the sources of different teams have different advantages and disadvantages. An institution collects funds by analyzing different sources to select the mixture of sources which will provide maximum benefit and minimum cost. Main objective of investment is profit earning. It is to be mentioned that when the total sales income of a business firm is higher than the total operating expenditure, it is generally called gross profit. We can get net profit by subtracting the cost of capital and tax from gross profit. So the cost of capital should be minimum to maximize the profit of the business. Concept of the different sources of finance. Business finance means supplying fund required for running a business. Mr. Rahman is the owner of a tailoring shop. He purchased some machines at the beginning of the business. Generally, a business person tries to collect funds from his own savings. For the purpose of machines purchases related fixed investment, because he can use this money for any duration. But if he sees after calculations that his own savings is not sufficient to purchase the machines, he can collect fund through loan at a certain rate of interest from different commercial banks like Janata Bank, Rupali Bank, or other loan providing financial institutions. He usually collects this type of loan for a fixed term. Fund can also be collected from bank and other non-institutional sources against collateral of fixed property of businesses like building, factory, and current property like raw materials, saleable products, etc. Besides, Mr. Rahman may meet the needs of finance by reinvesting the profit earned by him without withdrawing it from the business. If Mr. Rahman feels cash crisis to meet the current needs like maintenance of machineries, payment of house rent, payment of labor wages, payment of electricity bill, etc. During this time when the business is in operation, he can receive advance from the buyers against future selling. Moreover, purchase on credit is another source of finance. Sometimes heavy machinery, big equipment, building, land, etc. can be rented from different organizations for a fixed period instead of purchasing, and thus the business person can remain protected from the risk of huge investment at a time. Big business organizations like Kohinoor Chemicals, Beximco Pharmaceuticals, Square Textiles, Singer Bangladesh arrange fund by selling shares and debentures. Fund collected from these types of sources can be used for long terms. Thus, due to the difference of forms, nature and objectives of business, an organization collects funds from different sources. In every organization, there are two separate sources of finance. One is the owner and the other is the creditor. Fund provided by the owner is called internal sources of finance, and that provided by the creditor is called external sources of finance. Most of the organizations usually utilize both of these two resources. Make a list of resources from which a furniture businessman can collect fund. In table number 2.1, classification of these two sources of finance has been shown. Internal sources of finance: fund which the owner of a business invests through his saved profit or unutilized profit is called internal sources of finance. Internal sources of finance can be divided into two types. A হচ্ছে ownership based sources, B profit based sources. Now we